Now I'm going to walk you through the settings, your tax settings, and the overall tax report. So as you can see on the settings page, you're able to update your email address or update your password. Just put in what you'd like to change it to and select update. Then you scroll down, then's your tax settings. So this needs to be updated when you first set up your account. You can either be an individual or you can be a business. So you can switch between the two. And then after that, you need to select the tax band you're in. So 0%, 20%, 40%, and then 45% additional rate taxpayers. This will tell the tax report what tax to charge. Then you put in your estimated annual income, which is an option. You don't have to put it in, but it will help us to estimate your tax more accurately, because this will depend on how much tax you need to pay. And then lastly, you will put in whether you are VAT registered or not. Most individual sellers won't be, so that will remain unticked. If you're a business, you can choose whether you're a sole trader or a limited company and when your tax year does start. Then you can also provide your tax rates, we know what to tax it at, and whether you're VAT registered or not. So once you've selected all those things, you hit Save Tax Settings. And then further down on this page, you will see the ability to delete your account. Once you hit delete account, we will lose all your information, all of your records. So only do that if you're sure that you don't want to take anything out. Now we'll go to the tax report. So first and foremost, at the top of the page, you can see the tax year that we're in. You can select that to change it. And we can see that for the tax year, we are under the £1,000 threshold. Therefore, we don't need to complete a self-assessment to HMRC, as no tax would be owed on any of that income, which is great news. You can see that it is also carried through our tax rate information, and you can see the overall summary of the tax. But if we were to change this and add some extra sales to push us up, so we'll put in something expensive, and we'll say we've sold one of those, and the sale price was £600. So that's £600 profit, and we record the sale. The tax report is now updated to say we are above the £1,000 threshold, so therefore we should do a self-assessment, but we are likely not to pay any tax on that, as our profit will be under £1,000. If we were to increase this further, so we'll add another sale, so something else expensive, we'll have one of those again, and we'll say it was £500. So that's £500 profit. We go back to the tax report. It now tells us that we do need to register with HMRC for a self-assessment tax return, because we're above the £1,000 threshold, but we are also above £1,000 in profit, so we will likely have to pay some tax. So once we scroll down to have a look at what that could be, we can see that here we have our gross revenue for resale, we have our total costs, and therefore what our net profit could potentially be. And then we also take into consideration our income, so we know what tax bracket we're in and how much tax we would already have been paid and how far we are from the next tax bracket. So then it would estimate what our tax could potentially be. But this is an estimation, and we do recommend that you take the reporting out of Stokroom so you're able to do that review yourself. You can see all of the items below that you have sold that would contribute towards your tax, and you can export them in CSV file or PDF. If you have any questions, feel free to raise a support ticket and we can give you some further guidance.